Hello everyone and good morning. This is Rachel live from 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 Studios and you're watching the opening bell. Let us first cast an eye on how market charter is panning out so far today. The ASX 200 opened slightly higher this morning. The top performing stocks in this index are 𝐊𝐚𝐥𝐤𝐧𝐞, Clinuvel Pharmaceuticals, Corporate Travel Management and Kogan.com. The A2 milk company, AMP and EML Payments are the leading laggards. Today, the iron ore miners and the Commonwealth Bank have slipped. Freedom Foods has successfully completed a $265 million recapitalisation to ensure the ongoing viability of the business and to pay down debt. On Friday, Australian shares flitted in and out of negative territory. And finally, the benchmark index closed the session 0.15% up at 7,030. The ASX 200 also closed positive on a weekly basis with a 0.23% rise as local tech stocks took cues from an upbeat Wall Street session on highs of a pickup in US jobs growth this month. Back home, Australian technology shares will be under the scanner today, taking cues from Nasdaq Composite, which was down 0.18% by closing on Friday. It is to be seen if the tech giants such as Afterpay, Zipco and Xero could spoil the sector's sentiments today or are able to shrug off overall volatility and maintain an upbeat tone. Having said that, Zip faces significant tailwinds given its recent geographic expansion, which was due in Europe and the Middle East. That's following their successful expansion into the US and Britain. Moving on to the oil price charter now. Oil prices jumped around 2% after 3 days of a losing streak, with investors watching a storm brewing over the western Gulf of Mexico. However, prices fell on a weekly basis as investors brace for supplies from Iran after officials said the country and world powers have made progress on a nuclear deal. Brent crude futures rallied to close $66.44 a barrel, while US West Texas Intermediate crude futures closed at $63.58 a barrel. Australian energy producers such as Beach Energy, Oil Search Energy, Woodside Petroleum and Santos could trade higher today. Then in the yellow metal space, gold prices inched lower on Monday. That's as robust US manufacturing data helped the dollar rebound from the lower levels. However, the yellow metal was still able to register a third straight weekly gain. Spot gold eased 0.1% to $1,876.42 per ounce, but prices marked a 1.9% weekly gain. Australian gold miners such as Newcrest Mining, Gold Resources, Ramelius Resources, De Grey Mining, and also Resolute Mining could trade with a slightly negative basis today. Let us move on now to the miners space. Asia's iron ore benchmark marked its third losing day on Friday, its second consecutive weekly fall as the largest steel producer, China, stepped up efforts to cool a soaring demand-driven rally in raw material prices. Iron ore futures for September delivery on China's Dalian Commodity Exchange closed daytime trading 3.4% lower at 1,096.501 a tonne. It had fallen 5.4% last week, the steepest drop since mid-March. On Friday, copper prices fell further on the back of profit booking. While some worried about threats by top consumers, China to curb surging commodity prices. And with iron ore and metal prices taking a correction, Australian miners such as BHP Group, Rio Tinto and Fortescue Metals may take a hit in today's session. Let us now have a glance at the US market performance last week. On Friday, the majority of the US stocks ended lower, with consumer discretionary and technology shares being the hardest hit. Data firm IHS Markit revealed the US Manufacturing Purchasing Managers Index rose to 61.5 in the first half of May 2021. That's the highest reading since October 2009. Economists polled by Reuters had forecast the index falling to 60.2 in early May. The Dow Jones, meanwhile, rose 0.36% to 34,208, while the S&P 500 lost 0.08% to 4,156. The Nasdaq Composite dropped 0.48% and closed the session at 13,471. Meanwhile, the rising COVID-19 cases globally remain a concern. According to the World Health Organization, official death tolls from the coronavirus pandemic are likely to be a significant undercount. Approximately 6 million to 8 million people may have died so far, according to the WHO. That's compared to the reported figure of around 3.4 million. Now let us zoom our lens on to the currency market. The US dollar gained some ground after stronger than expected US manufacturing data. The US Treasury yields eased as investors mostly shrugged off the data. The US dollar index rose 0.27% to 90, while the Australian and New Zealand dollars traded lower on Friday, taking their lead from iron ore and mining stocks that were hit after Beijing vowed to put a halt on the soaring commodity prices. The commodity price sensitive Australian dollar closed 0.23% lower at 77.54 cents last week. It remained short of its May high of 78.91 cents. And now, before we head to other important market updates, let us take a small break. But don't go anywhere, as we'll be back in a very short while.
At 𝐊𝐿𝐼NE TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts. Our experts will share their timely inputs. So join us on this exciting journey of live streaming, financial and stock market news. 𝐊𝐿𝐼NE TV.
And welcome back to the Opening Bell Show. We're discussing today's latest market updates. Let us look to the crypto charter now that defined a broad sell-off across the world on Wednesday. In the cryptocurrency market, Bitcoin fell over 10%. That was after China doubled down on its effort to prevent speculation and financial risks by cracking down on the mining and trading of Bitcoin. The crypto fell 11.5% to $35,952, with its peers Dogecoin losing 11% to 30.3 US cents and Ethereum falling 9% to 2,095.50 US cents. On Thursday, the Fed flagged the risks of cryptocurrencies poised to financial stability, while the US Treasury Department called for new rules that would require large cryptocurrency transfers to be reported to the Internal Revenue Service. Moving on now, let us look at some major newsmakers in the Australian share market today. The biggest news of the day comes from buy now, pay later giant 𝐊𝐴. The company is set to expand into Europe and the Middle East with acquisitions of European BNPL provider Twisto and UAE-based Spoteye. Zip expects to complete the Spoteye acquisition in the third quarter and the Twisto acquisition in the fourth quarter. The acquisitions have a combined enterprise value of around $180 million with transaction consideration of around $160 million. That reflects Zip's current equity interests in both the companies to be funded with either cash and or shares at Zip's discretion. Next, let's talk about Synlait Milk, who on Monday said that it was downgraded its full-year financial year 2021 guidance on account of expectations of shipping delays and lower prices for ingredient products. Moving on now, Australian gambling machine manufacturer Aristocrat Leisure reported a revenue fall of 1% to $2.23 billion during the first half of the year. The profit after tax dipped 74%, while the EBITDA rose 6%. MyState is hoping to raise $80 million to accelerate its growth strategy. And as mentioned earlier, Freedom Foods has announced that it has completed a capital raise of $265 million. It includes a placement and an oversubscribed wholesale investor offer. Notably, Freedom Foods is engaged in sourcing, manufacturing, selling, marketing and distribution of plant-based beverages, dairy and nutritional products. Next, Australia's leading provider of high-performance animal nutrition solutions, Ridley Corporation, has inked an agreement to sell the Westbury extrusion facility in Tasmania to Gibsons for $55 million. Lastly, Nuix has set up an independent board subcommittee in response to the recent market feedback. Nuix is an Australian technology company that provides investigative analytics and intelligence software for extracting knowledge from unstructured data. And now, before we hit to other important market updates, let's take a small break, but don't go anywhere, as I'll be back very shortly.
The market takes the weekend off, but your money won't. Get a comprehensive update on the ASX listed stocks and market trends. Watch the experts touch upon the fundamental and technical developments and trending strategies in the equity space. We will be your daily guide as you explore the Australian share market, be it global vaccine developments or China's trade relations or global political turmoil or economic revival prospects. We will bring you live updates driving the equity market trends. 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 TV.
And welcome back to the Opening Bell Show. We're here discussing today's latest market updates. We've reached the last segment of our show now, so are there any specific events that can drive the overall market scenario going ahead this week? The volatility in Wall Street has shown a massive spike in the past 1 month. While the fear has been visible, a trend which may lead to further downside in the shares. The volatility index, represented by Chicago Board Options Exchange's Volatility Index, has been on an uptrend. Also, the CNN's Fear to Greed Index has come down below 40, which is considered as fear sentiment in the markets. This comes after the post-pandemic stimulus money had shot this index to over 80 as well, denoted as extreme greed. Both these indicators hint at headwinds in stock markets to continue for the next couple of months. There is no doubt that equities are overly heated and the valuations have skyrocketed as large sums of the stimulus money got diverted towards the global equity markets, even though fundamentals remain an uncharted territory as COVID-19 has not been relenting. So is it a time for a much-needed correction? Well, definitely an interesting space for us to watch out for. Having said that, closer to home, the Australian Bureau of Statistics is scheduled to come out with a few important data releases this week, which may have an impact on the market. On Tuesday, they will release international merchandise trade and weekly payroll jobs and wages data. On Wednesday, construction work data will be out. And on Thursday, they will release data on business conditions and sentiments and the labour force. Then on Friday, data on the national Australian accounts for financial year 2018 to 2019 will be released. Stay tuned for more live updates on 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 TV across the economy, markets and sectors. I'm Rachel, signing off for now.